All right, starting off with SPY. Relatively bloody day today. Opened 417 and change, closed the day 414 and change. Um, I'm not really going to go too in depth into SPY. I've done that in my previous two videos. There's really no need. SPY is very bullish. Can't be green every day. It is what it is. Healthy pullback on SPY. Day 39 in a row, closing over the 200 EMA. Bullish. Golden cross in the daily. Bullish. Higher lows, higher highs to the upside. Bullish. Um, Really not much to say here. Taking a look at the micro, um, there's two ways you can look at this. Number one would be from this descending trend line that you have here, which we broke out of to the upside. You could make the case that SPY is going to come down to test on this trend line around 411, 410, 411-ish. I don't really see that being the case, although it is a possibility. The other case would be this red horizontal lines run across pretty much at the 414 range. While SPY was trading in this range here, wicked off of this a million times. Couple wicks above, come back down above, over and over, rejected there, break above, come below, rejected, rejected, rejected. This 414 level acted as a pretty heavy resistance, and we broke above and found a bounce today on this level again around 413.70. So you could make the case that that was the test of the breakout right there, and you could expect upside for SPY tomorrow. I'm leaning more towards the case of expecting upside for SPY tomorrow, as I'm also expecting upside for AMC. So we'll get into that. So that's pretty much it for SPY. There's really not a lot to say. I said everything in my previous two videos. I'm very bullish on SPY. I have SPY going to new highs, and that's pretty much it. So jumping into the macro on AMC, and I feel like a broken record at this point. I've gone over this a million times, but I don't know if I have new viewers watching, and this is the foundation of my thesis, and it's very important as it's pretty much the foundation of my TA in general. And that being that this three fractal segment played out right here, this green, red, and blue box here leading up to the squeeze in January, is exactly what we're playing out again from the breakdown in this flag in November, playing out the same pattern except descending. The bars are overlaid, overlays perfect. The green and red boxes here, I didn't fragment or stretch the bars. I just pulled them from here, overlaid. The blue section here, which is pulled from this, I fragmented and stretched them a little bit as we've been barcoding on low volume for the past year pretty much. I mean, this is almost a year now from this top here to where we are today. So this has been taking a very, very long time to play out. Very low volume on a daily basis and barely moving. Pretty much just being pushed to the right. Still, we're tracking it perfectly, and I've gone over this as well. I can do it in the next slide, which I still haven't updated this, but it's not a big deal. So the first bottom here, the tri-peak in the middle, which we've already got, and then the second bottom, which is a lower low, same as here, and then the trend angle from low to low is pretty much the same as well. And then from that low, you trade in this channel, and this channel, this uptrend that you have, takes you to your squeeze. So that's pretty much where we are right now. At this point, seeing the price action yesterday and today, I've pretty much ruled out the possibility that we're in the January 15 sequence, which would be this candle here, the downside of it. I've pretty much ruled that out at this point. It's becoming very, very clear that we are in this downside here where you're fighting to reclaim the channel. So the January 13th to the 15th is where we are now, in January 13th. So that's pretty much that. And this is just showing the candles now of what I just showed you. This is updated, and it looks really good. The case for being in this segment here, this January 13th segment here, is becoming very strong as we've been sideways for pretty much a week now, and just chopping up and down, fighting for this channel again. So it looks very, very good for the January 13th situation here. Once we finish playing this out, we can expect to hit the top trend line one more time, retrace from that, and then you would gap up over the channel. So I'm leaning heavily towards being in January 13th. I'm ruling there is still a possibility that we're in the January 15th sequence, but I'm pretty much I've ruled it out. I don't think that's the case. I think we're here with almost 100% certainty. So the channel looks very good. The macro looks very good. SPY looks very good. I've gone over all of that in my previous videos. So jumping into the micro now, and from what I'm seeing, we are moving very, very slow through this sequence here. So far, from what I can tell, and I've mentioned this before, tracking on the micro is very, very difficult to do. From what I can see, in the past week, from Wednesday to today, which is Tuesday, we've moved from 11 o'clock a.m. to 1 o'clock p.m. So we'd be sitting in these candles here, expecting this upside tomorrow. To roughly, I would say 530 to the 550 range. We are tracking dangerously slow right now. So here's zoomed in, and I have some touch points here from the absolute low that you get. You find a bounce up, and I have this this red horizontal line drawn across, which would be your resistance. You could also it's also indicated by this green rectangle, and then I have this white support line drawn across here, also indicated by the red rectangle here. Same on this side. So from the absolute low that you see here, you find a bounce up to the resistance at this red line, and also the green rectangle. Same as here. And we wicked off of it multiple times before you come crashing back down to the white support, which you do here. And then in that range, you just start chopping up and down, not quite hitting the red resistance, but keep bouncing off the white support. Exactly what we have over here. There's a few wicks below it. It's never going to be perfect. This played out very fast. This is taking a very, very long time to play out, and the wicks are never going to be perfect. This is something I've noticed from my tracking. The wicks are going to be close. It's gonna look very similar, but it's never going to be perfect the way you saw it back here. So from this last candle that you have on the support here, you find a bounce up to the red resistance again, reject it, and then you break over it. Exactly what you have here. Reject it right here, come back down, and then break over it to your high, as we do here. And then from there, you come down below the resistance again, break above it again with a higher low. Same exact thing here, break above it with a higher low, and then from there, you come all the way back down to the white support, as you do here, find a bounce off of it, which would be this red candle here, and then from there, you come back down and double bottom that once again, as we did. And then we'd be sitting in this blue rectangle right here, which would be right here, expecting this upside tomorrow, where we would break above the red resistance line and break above back into the channel, and then probably, in my opinion, come up to the 530 to 550 range, and that would pretty much be your day. So from what I'm seeing, and obviously, like I mentioned this before, tracking on the micro is very, very difficult to do. I could be wrong about the tracking on the micro, but it looks good to me. This is what I'm thinking for sure. I do not think that we're in the January 15th sequence anymore. I think that we're in January 13th. Almost positive that we're in January 13th, and we are moving dangerously slow. As I said, I said this before, 11 a.m. until 1 p.m. is this whole sequence here. This is last Wednesday until today is Tuesday. So 1 week to get what happened in 2021, which took 2 hours. We are moving dangerously slow. I think we're going to be spending a very, very long time, possibly 2 weeks, maybe 2.5 weeks under this channel, chopping up and down, getting all this price action. This is going to take a while to play out. This price action here, and I'm showing the channel again, is going to take us a while to play this out. Potentially 2 weeks, maybe even 3 weeks to get the rest of this price action before we come back to the top of the channel, reject it, come down. And then I mentioned from there, the gap up that we get over the channel should bring volume. That volume should bring acceleration and speed, and things should start picking up the pace from there. So having said that, May 31st, the argument for peaking on May 31st, I think, is off the table. I'm looking at the June peak now, so that would be June 28th. Somebody brought to my attention in my comments that Juneteenth is a holiday, and that would set up perfectly for the OPEX coincidence, if you want to call it a coincidence. That would set up perfectly for that, landing us on June 28th would be our peak next month. I think the case for June 28th looks good still. Obviously, that can change. It just really depends on how fast this plays out. But May 31st, to me, it looks like it's not gonna be happening. I think we're gonna be spending some time under here. Potentially 2 or 3 weeks we're gonna be spending under this channel, fighting to reclaim the channel. When you hit the top of the channel. By the time we break into it, the top of the channel will probably be around $7. Retraced back to the bottom from there. This I would expect to play out much faster, as this pump here should bring volume as well. So this would play out a little bit faster in my opinion, and then the gap would speed up even more from there. But as far as where we are in the tracking right now, from what I can tell in this channel, in this chop range here, fighting for the channel, this is going to take some time. So that is pretty much it for the video. So today we pretty much got what we expected. I said red today, we got red today. SPY was red today. And that's pretty much that. So far, so good. It looks good to me. We're still tracking. We're moving very slow though. It just is what it is. There's nothing I can do about it. We're just moving very, very slowly through this. But still, nothing has changed. My thesis still stands strong. We're tracking these bars perfectly, which are pulled from here, the bars that lead up to the squeeze in January. It looks great. It seriously looks fucking amazing. It's just, at this point, it's a matter of how long it's going to take to play out this channel now. So that's pretty much it for the video. I mean, that's really it. SPY is very bullish. Bloody day today. Could potentially expect a bounce off of this range tomorrow. There is also a case that you come down to 411 and find a bounce off of this descending resistance here. Overall, SPY very bullish, and overall AMC is extremely bullish as well. It's just going to take some time for this to play out. So I think that's pretty much it for the video. Another quick one. If I'm doing daily update videos, they're probably going to be pretty quick. So that's pretty much all I had to say. So yeah, tomorrow, potentially expect a bounce for SPY off of the 414 range, and for AMC, I'm looking for a bounce to the 530 to 550 range. That's what I want to see tomorrow. Of course, I could be wrong about that, depending on where we are in the tracking. If I am wrong, there are other scenarios where we could potentially be at this point already. I just don't think so. So we'll see how tomorrow plays out. If we do get this pump tomorrow to 530 to 550, great. You know, we're tracking perfectly. In the same breath, in saying that, we're tracking very, very slowly. So that's pretty much it for the video, and I will catch you guys tomorrow.